Hello, welcome back to this week's video. As usual, we are going to look at the stocks that was posted in the email. But on top of that, let's talk about some macro environment. So the market has been on a serious sell down. For the US market, if you look at the Dow chart, it seems to be quite okay because this looks like a normal pullback. Especially if you look at the Dow, they have some supports over here where this is called the previous resistance. It touched one time pullback, touch another time, pull back many times, and when it breaks up and come back to the same level, this is going to be as a support. So it looks relatively calm in the US market in the face of rebounding inflation and of course interest rate hike coming in September. But we still have one more chance because the rate hike is the FOMC meeting is late September. So if September CPI data shows decline again, inflation drop back, then we may be seeing some rebound from the market, especially in the seasonal terms. If you were to observe the market throughout a year, the August, September tend to be a weak month, which means the market tends to pull back. Now, if you look at the Asia front, it's not so friendly. As you can see, STI pull back violently, and you can see from the high till this 3394 drop all the way about 200 points. And actually this presented a very good opportunities, especially for those who like to have a diversified portfolio, because you can see the index is already pulled back at 6.2%, and if it gets any worse, it will be about 7.9%. And every day in my email, I actually highlight about the STI. Let's say for today, STI, where is the next potential support? Now there's this thing called dollar cost averaging, DCA, and for STI index, it's a relatively safe index where you can see on a major trend, it tends to swing down and swing up. If in the event when it gets into a perpetual downtrend, this was 2020 when COVID hit us, it went in the downtrend, but the market can recover because due to corporates doing well, recovering from the situation. So this actually gives you an opportunity as well. Why? Because if the index pull to a low, especially at support level, and now you can see the STI index seems to be holding at this gap support. So when it has a gap up here, then we can call this as a support. And this is a doji, which might be a holding support. This is one of the dollar cost averaging point, which means that you buy one batch of your position here. Okay, and what happened is that if the index managed to rebound in October, November, and then goes back to the high over here, it stands to make a 5.7%. It doesn't sound very exciting, but this is the safest bet or safest trade that you can. Why? Because the ETF that tracks the STI, like this Nico STI ETF, they pay dividends. So you can see the recent one was 0.067, right? And this is 0.063 or 64 if I average up. So while waiting for the index to recover, you stand to get dividends as well. And like I say, so far our index has been performing quite fairly good. Unlike Hang Seng, of course, due to the China economic issues, the country garden issue where they're almost defaulting. Now we can see Hang Seng is on a perpetual downtrend. So for those who invested way earlier here, right, it's still facing losses, but you still need to give some time for it to recover, especially when the China economy recovers. But for the time being, you have to hold your horses, just wait for the whole market to recover, especially if Hang Seng right now is at one of the crucial support. So I almost this morning I almost thought that it broke down already and couldn't recover. So I was preparing myself for the next level to look for. The support range here is for you to look out for if Hang Seng were to continue lower. Well, let's hope that it can close higher and make some recovery for the rest of next week, right? Because today is Thursday, tomorrow last day of trading for the week, and then next week hopefully there are some upward swing. Now back to stocks here. We have some stocks that was highlighted here. We have namely Sembcorp Industry, Hong Kong Land, OCBC, Alibaba, ST Engineering. Okay, so I'll just start with SETS and Keppel Corp. Now, when we see this counter technical charts, like I say, provides the information, but the follow through buying action is very important. So you can see SETS was hovering at the support level, and we were anticipating that if it can rebound, then it will be a good sign for it to continue its uptrend. But unfortunately, it did not manage to rebound. It struggled at this trend line, and then it got dumped all the way down to this support level at 255. The result was fairly good, okay, because they have lesser losses, and if next quarter it can turn positive, I think the share price has some potential. So having said that, of course, we can wait for a trading opportunity here, or you can wait for some confirmation. If let's say the stocks continue higher towards 259, then there might be a chance for it to continue higher. Ultimately, we are looking at 283, which is one of the major resistance, then 291. Keppel Corp, although it formed a short-term price pattern, but there isn't any follow-through buying. So you can see it slimmer all the way down to hit its previous resistance support at 682, 681, and this can be a hammer pattern if we can close higher. And let's see whether it can recover, because certainly it's oversold because it has been selling for so many days. We have to see whether the market condition is suitable for rebound. Okay, next, if you were to look at Keppel Corp, generally the uptrend remains intact. So it becomes very important for it to rebound from 681. Then we have Alibaba and ST Engineering. So ST Engineering, we were looking at this potential breakout from this 377 level. So from the chart itself, the counter broke out from 377 bullishly, and the projection level was to 398. It went to 391 high, then it got pulled back, so forming a new resistance here. And next, we have to see what's going to happen here. I think it's going to go for XD soon. Dividend here, 21st August, 4 cents. So which may affect the share price a little bit. So we got to assess the chart then on Monday on the adjusted chart. Then Alibaba was on the uptrend, hammer pattern, but unfortunately this is not a time for the counter, as despite having good results, the market rebound, or rather the rebound from Alibaba was not very good, as it opened higher, closed lower. And then it got sold off all the way down due to the macro environment, and now it's recovering, forming a bullish counter attack pattern. This two candle pattern, if Alibaba were to close at the same price, close at 225, 89.25 here, then it will be a bullish counter attack. If Alibaba close at this 89.99, then we have this one white soldier. Then if we have Alibaba closing at this 91, then we have a bullish engulfing pattern. So let's see where Alibaba is going to close. Sorry, I beg your pardon, it's not one white soldier, it's called bullish piercing. So now Baba is about 89.55, which is somewhere middle of the black candle, and this will be a bullish piercing. Then if it close higher, then it will be a bullish engulfing. So counter attack, if it close the same, halfway or the same at 89.99 will be bullish piercing. Then after that, the breakout 91.13. Okay, so what does it mean? So if we can recover strongly, then hopefully we can see it move back up towards 98 resistance. Then we have OCBC. The counter seems to be forming a symmetrical triangle post-dividend. And what we are looking at is that this counter actually has a breakdown. So if I were to connect this and this, then you can see a breakdown here. And the projection is to $12. So if OCBC continues its downward movement, $12 support may be tested. Currently, it's testing one of the support at 12.29. But if you ignore the symmetrical triangle, which I've plotted, you look at this top, will form a double top formation as well, especially if the breakdown is successful, where OCBC closed below 12.24, long black, and then the volume is high. Then we may be seeing OCBC continuing lower to as low as 11.75. Okay, it will be good for the banks to go down, right? Which means that if the banks goes down, STI will go down further, which you can collect. If you don't like STI ETF, which is a diversified portfolio, you like to be focused. So you like to have more gains, because comparatively, if let's say you manage to buy OCBC at this low, you get 11.5% if it retests a high. If I were to compare Nickel STI, so let's say if STI were to hit this low and rebound back to this high, the gain will be 8.2%. So OCBC definitely will have more gains. But of course, rather than focusing on one counter, you are on a diversified portfolio, especially if Sembcorp industry is bullish. So Sembcorp industry came back to test its support level over here, and you can see this trend line support here, and it provides an opportunity for traders who are interested in this counter for an entry position technically. Okay, so especially if you can close above 572, then we may see more upside towards the projected target at 651, or at least it hit its resistance at 604. Okay, so today we have Hong Kong Land. Didn't notice that Hong Kong Land is giving out dividend today, but it's a 6 cents dividend. So we can see Hong Kong Land recovering quite nicely. And if I were to cater for the dividend, all the price will be shifted down. So like for example, the resistance, which was 370, will be 364. The projection, which is 387, will be 381. Okay, and if this Hong Kong Land can close at 364, which means that the double bottom formation over here, double bottom formation, remains intact, and a breakout 365, etc. will help the counters to go higher. Okay, so this is this week's video. Thank you for the like, and I will see you again next week.